I appreciate you hopping on the Zoom call with me and give me some more details about what's going on right now in the market. Let's just introduce ourselves for the people that don't know us.
My name is Scott Williams. I'm a mortgage loan officer for First United Mortgage Group. I've been lending for a little over 12 years now, so I've seen some different cycles along the way, but that's where my background lies, and I just love the lending process.
My name is Gabi Vitui. I am a realtor with eXp Realty in Austin, Texas. Let's jump in. I know everybody is talking about the rates. It's been changing in the last few months. So what's going on right now?
It's one of the top questions that I get right now. Mainly, in a normal market, when we'll say pre-pandemic market, we could say, where are rates right now? And I could quote an interest rate, and that rate would be fairly typical while the buyer, prospective buyer was looking for a house. At this point, if we had had this conversation about 3.5 weeks ago, and you came to me and said, what are rates? I would have said the mid sevens. And if you had come to me a week ago, I would have said the low sixes. We have this all over the board. So I'm having to change the conversation with my buyers and just say, look, here's where we are right now. You can't lock your rate until you go under contract. So please keep in contact with me so that we know that you're comfortable with the payment and how it's going to come out.
And it's very fair because it's been changing so much based on what you've been seeing with the changes, and it's a little bit all over like you said. Do you have buyers that really scared, or they're like, I understand it could go down and I can refinance?
Well, I think that we've finally reached the point where the buyers that are in the market know the rates have changed. Say 3 months ago, if the interest rate was 3% in January and all of a sudden in the middle of the year, I'm telling them it's in the mid fives going up to the sixes, that was a little bit of a shell shock. I think people have come down to the understanding that rates have gone up and there's not really any chance of them going down at this very moment. So it hasn't really scared away those people, the ones that have been watching the market. It then kind of transitions into what are our options? Can we refinance in the future? What are the programs now? And we just kind of tailor it to whatever's going to be best for them.
That takes us to predictions, if you have any. And of course, we don't know the future, but everybody has their own input about things and also what the data tells you.
If I was to be completely honest with everybody, I don't think anybody could gauge with any accuracy where rates are going to be. I will say that the last Fed meeting, the notes that they gave and the predictions that they said were favorable for slowing down the increases, which translated into rates decreasing on the mortgage market. If the Fed was to continue those reductions or slowing down of raising the Fed interest rate, then I think that we're going to get to a point where we're going to level. The hope is that we'll get back down on interest rates, but at this point, even the best guesses are maybe the end of 2023 is when we're going to start seeing that happen.
We have a full year.
Yes, we have a full year. I'm really hoping that we can get to this point where we hit a ceiling and I can sell somebody, hey, we're at 7.5 a month ago, but we're at 6.5 now. And that will be a conversation of it's been like that for months. I think this is a stable level, and then of course going into the conversation about potential refinancing in the future. But that's where I'm hoping for is we can normalize, and then I think people will be a lot more comfortable with purchasing when they aren't having full 1% or 0.5% increases or decreases every other week.
Use the term normalize, and of course it can be a little bit different for everybody. I doubt that the rates are gonna go down how they used to be during COVID. It was just unheard of to have rates like that. So do you have a prediction, or when you say level, are you thinking it's gonna be still in 6, 7, or would we get somewhere in the 4s or 5s?
It would all come down to what the Fed does. During COVID, the Fed was artificially making the rates as low as they were. And when they stopped participating, and then even went as far as to start increasing the short-term rates, that's why we're seeing the increases that we're seeing this year. So if we get to a point where, let's say, nothing changes, they haven't raised the short-term rates in a while, and the rates are at 6 to 6.5%, If they're seeing too much of reduction in the economy and they say, you know what, we need people buying houses again, we're going to start participating, then I don't see a reason why rates couldn't go back to the fours. But will they go there without their help? That's what I don't know. And would help come is the other question.
Yes, exactly. And well, from a buyer perspective, and me as a realtor looking at things, it was so tough for buyers in the last 2 years. And if they actually landed on an accepted offer, they had to bring so much money to the table because prices are leveling and you can negotiate right now more, you have options. So, from a buyer perspective, I would think, yes, rates are a little bit higher, but I still need a place to stay. I need a place to live instead of paying rent, and I don't have to offer 50,000 or 100,000 over asking price. This could be a good time to buy. It seems in the entire year it might fluctuate, but it's gonna to the point, or let's say we don't know, that we'll get into the fours.
Yes, I agree with the things that you're saying. I think that 2023 is going to be an interesting year from the rent standpoint, mostly because in 2022, property values from Travis County and Williamson County appraisal districts went up 30 or 40%. There's no cap for investment properties, so that bill could potentially be passed on to upcoming leases. So I'm thinking that maybe we're going to see a rent increase in 2023 for single family homes. But to go to your other point, I think that yes, we've seen prices come down, but I've also been seeing sellers that are understanding to sell their house, they're going to have to give some buyer incentives. And I've been seeing some rather large concessions that buyers are then using into either a permanent rate buy down or a temporary one, which was just unheard of in the past few years.
Would you elaborate on that, explaining it a little bit? What does that mean for the buyer and for the seller?
So there's two types of buy downs that we'll talk about. The first one is a permanent buy down, which would be more commonly called buying points. So essentially the buyer or the seller, whomever is contributing the funds, is saying, I want to increase my closing costs in order to buy down the interest rate to a lower level. For example, if the interest rate today was 6.5% and they wanted to buy it down to 6%, I would have to add an X amount of dollars to their closing costs in order to achieve that. And that rate, whatever they buy it down to, is for the life of their loan. So whether they keep it 30 years or they keep it 2 years, that is their interest rate. The second type of buy down is a temporary buy down. What it is it's paid for by the seller. And there's a couple different versions, but a 2-1 buy down would be if the interest rate today is 6.5%, the interest rate to the buyer is 4.5% for year one. It's 5.5% for year two, and then in year three it goes up to 6.5%. So what they're doing is they're having a lower payment in years 1 and 2 temporarily, and then the hope behind that is either they're happy with the payment at 6.5%, or they have a chance to refinance or some other plan that they've had.
A lot of people thinking like refinancing could be an option after a couple of years, or depending how the rates are going as well. If a potential client comes to you, you are able to show them in detail numbers and options to see if you buy down, is it worth for you to buy down, to buy points?
That's correct. And once we've formulated at least a plan, maybe not the final plan, that's also where I would contact you and let you know what the plan is. Because if we're going to need $11,000 of seller concessions, you're going to need to know that before you start the negotiations. You don't want to go under contract and then spring that on the seller. I don't think that that would go over very well. I try to have those conversations with everybody in the beginning so that you're prepared for the negotiation side based on the conversations that I've had with the buyers.
I rather know sooner than later. I don't want to even upset the seller to the point that they're not willing to negotiate. I understand that now there are deals and you can get some good deals, but also, they're realistic. Everybody has to find a win-win situation if possible.
That's definitely key to that is the communication. And I just think it gives off a better vibe to everybody. Instead of going in at the last second and changing things, laying the cards on the table and saying, look, let's make a deal.
Yeah, that's stressful for everybody. One more question, and well, anything that you might add. What's the most asked questions you get from buyers?
In the past 6 months, it's all been rates. What are the rates doing? What it is today? What do you think it's going to do next time? But I guess the second most common one is, what can I qualify for? And that's a great question, but I typically will put it back on a buyer and say, well, let's talk more about what you're comfortable with. The guidelines might allow us to do things that you're not comfortable with, and we won't want to put you into a payment you're not going to be able to make. So, yes, here's where the rates are today, but let's find something that's comfortable so that you're finding that right price point and you're not seeing $600,000 houses when they should really be $450,000 houses.
Exactly. Anything else that you could think of that maybe you heard from buyers?
The only other thing I would leave buyers with is it's always good to speak with a specialist. Talk to a lender, because the internet's awesome. The internet has so much information, but unfortunately what I found is a lot of times the articles that are written by journalists because that's their job. But unfortunately they start melding pieces of information about different lending programs, and sometimes it gives off incorrect information unintentionally. The most common thing would be the I have to put 20% down. Well, ideally, you want to put 20% down if that's within your budget, but there's programs where you can put much less than that down. I would say talk to a lender what's going to fit your family's needs, whether that be a lower down payment or a lower interest rate or whatever those might be, and tailor it to you rather than trying to piecemeal general information from the internet and trying to apply it to you.
Yes, and then you end up with a huge surprise that either extra fees or something that you didn't think about, or some documents that all of a sudden you can find and you need it for qualification. A lot of things can happen.
There's a lot of gotchas. There's a lot of pieces of the puzzle, whether it be on the real estate side or the lending side. So you need a really good team behind you.
Thank you so much. You offered so much information. I will put your information below and my information as well. If anybody has any other questions, feel free to reach out to Scott or myself, and we are more than happy to have a conversation with you.
That sounds great. I appreciate you having me.